Good afternoon, everyone. My name is Jeff, and I wanted to create this YouTube channel to talk about my investment journey. I often get a lot of questions from my friends and family about what to buy, when to buy. And I kind of decided it's about time that I just kind of put some content out there, what's been working for me, and next what I'm going to be doing differently moving forward. When I started trading, I really kind of started out in Bitcoin 2016 and got into the first cycle probably halfway through it. Did really, really well. Decided that Bitcoin was going to go up forever, and really kind of held the assets all the way through into the next cycle. I remember buying Ethereum at 1500, and then during the COVID crash, watching it drop down all the way to the $80 range. So I've kind of went on this journey to find different ways to predict or different ways to use math. I'm a PhD by trade and I teach full time. I look at policy, I teach policy, and I wanted to find something that was going to help me stay on the right side of the trade, not to time the top or time the bottom, but really kind of come up with a way that's systematic as far as DCAing into the market. So in this or on this channel, you're going to hear me talk a lot about Ben Cowan. Ben Cowan uses risk metrics to DCA not only into the S&P, but also into Bitcoin. So that's going to be a future video, is just showing like the risk metrics and how I use it in conjunction with the cycle trading. So cycle trading, really, I found years ago on Bob Loukas' channel, and Bob Loukas really talked about this idea of different cycles. You have daily, you have weekly, monthly, and yearly cycles. And that's what this picture is the looking at the daily counts and the weekly counts for each one of the ranges. So really, it's using the risk metrics by Ben Cowan to kind of show when is a good time to get into an asset and when is a time to start taking profit, along with the cycles to kind of know when something is at the end. So I've had a lot of people right now asking me about getting into the crypto markets. This is going to be focused on the S&P because that's what all my retirement accounts are. But we're really late in the cycle, and that is something that there's not a lot of weeks left, I think, in the topping of Bitcoin. So you'll see that kind of in the next couple of days, if not weeks. So this is just a breakdown of the cycles. For this one, I'm going to focus just on the daily cycles for the S&P. Typically, you'll see cycles start it's 40 days, but the cycle count allows for a 10% variance or 10% window. So that's where it kind of gets to 36 to 44 days. Now, as I share my screen on the next one, which will be the actual chart, it's not perfect. So I think that's the other thing to think about is cycles can run later. People have different cycle counts. I have an indicator that picks the highs and the lows. So in that, it's just a tool to kind of DCA in kind of what you're looking for. If you have multiple, what they call left translated cycles, means that the top of that cycle comes within the first half of the 40 days. So 20 days or less, or 22 days and less if you're looking at the 44 cycle. So the indicator that I'm going to show you, if it has an L, that means it's a left translated. So the high was put in early in the cycle or early in those 40 days. And then the second half, or 20 to 40 or 22 to 44, was unable to break that high. So that's why it's left translated, meaning that it's going to be, a bearish cycle. And what we've learned is through the cycles, it can keep you on the right side of the trade. So, for example, when you look at 2022, the cycles were left translated all over the place, meaning that it wasn't safe to get into the market or DCA in. A lot of people call it catching a falling knife. I personally believe DCA in the market's a good idea. So that's what I'm going to talk about in another video, is what my strategy is moving forward. So now that we've kind of looked at the cycles and looked at a left and right translated cycle, let's take a look at the indicator that I have. And this is through Camel Finance. He's a person on YouTube. I really like the simplicity of the indicator. So he was able to kind of create an indicator that falls within this window of the 36 to 44. It does work on Bitcoin and all these assets here. I know he really uses on gold and buys a lot of like gold mining companies based off of it. But I'm going to look at the S&P. We'll definitely take a look at Bitcoin in a later video. But all of these are within the window. From here to this point is a 39-day window from a high to low. If this would have been a left translated cycle, you would have seen the high put in between days 1 and 20, right? And then you would also see the right not break this high, which it does. So that means it's a right translated cycle. This is a little R up here. So the same thing with this one is coming out of the April crash, you would see that halfway through, you make a higher high. So the cool thing about this is when we had the Trump discussion here as far as the dump into April and the low, if you would have bought in on that daily cycle, you would have caught all those gains. Now I'm going to talk about in a minute a way to use different ways to get into the trade. So for example, Camel says that once it breaks a 10 moving average, that's a good way to kind of get into a long position. I'm not the one to use margin, so I would just DCA into this market. So right here, I was buying VGT, I was buying VU, I was buying things into my retirement account because to me, that was a safe bet that we were going to kind of go up, right? So this is left translated because the top was put in before the halfway mark and dropped down. And obviously these days or these counts, some of them were without outside that window of the 36 to 44 days. And that's the point of it is this is right about 75 to 80% of the time. But I can tell you that I've been using this for the past 6 months now. Before the indicator, I was just doing it myself. I was just counting out the days, and it's really helped me DCA timely into the market. So you can kind of go back and kind of see this is neutral, meaning that there wasn't a new high or a low made. So that's where you kind of see the neutral one, a flat market, if you will. But I also really like these, these waves to kind of show you where the peak might be, right? So if it's going to break it, you want to see these diverge. You want to see this keep going up and this one keep going down. So let's try to go all the way back to 2020. What if he'll go back to 2022? So we can see the long bear market that we were seeing. So this is the start of 2022, left translated, drops down. Then you see neutral right here, trying to make a higher high, but it doesn't, falls down, keeps going down. So all of these are left translated. So the fact that they're all red, some can say, hey, out of the first or two translated cycles, I'm going to cut my losses, right? And get completely out of the market and come back when it starts making right translated cycles. And if you would have done that, you would have done fairly well, right? But you never know. So for me in my retirement accounts, what I was doing is I was waiting. With the tax accounts, you have up to a certain point to fund them. So I was waiting to the last possible moment. What I've done now is I've just kind of stuck to a strategy of 2,000 a month. Sometimes I invest it, sometimes I just add it to the retirement account and put it in like a like Cashi, CSHI, just to get some principal appreciation. But most likely, what I'll do in the next bear market is something very similar: is put it into it and be very, very strategic in how I deploy my capital. So that's a little bit about the left and right translated cycle. The other thing I would say too is this is what Camel says is a good idea to kind of keep on the right side of the trade. So I just kind of showed you the 10 EMA. So here you would see it's a right translated cycle, comes down to the low. Once it breaks it, you would get in and kind of ride it up. You can also do the MACD, which is a good indicator, is like at the lows, you should be closer to the 20s. So as long as it's on this side of the MACD, you would stay into that trade. Again, I'm not a margin person or I'm not a leverage person because I want to just use my retirement accounts to just retire. I am going to start an M1 finance account where I'm actually going to use some margin. I think I can do a little bit better as far as like using some of these strategies to use leverage at some of these lows, and in a bear market, use it to leverage to buy more assets on using Ben Cowen's risk metrics. I'll talk about that in a minute. You can do trend line breaks. I know this is the other favorite one that Campbell likes, is that as you kind of see the trend break here, that's a good indication to kind of get into the scenarios. Same thing with shorting. You can go the other way. So, if you had the line going this way, you can short the S&P 500. But I really like this ebook because it um, gives you different ways to kind of catch the bottom. I know for Camel, he was the one, him and Ben Cowan and Bob Loukas at the end of that bear market that we had in 2022 finally said, okay, there's a shift. And the way you know that there's a shift is you go from all of these left translated cycles into the right translated cycles, as I kind of shown right here. So if you start seeing a string of right translated cycles, that means you're on that side of the trade, right? You're always going to get these left translated. I mean, pullbacks always happen, but just kind of using this simple strategy, you would have done really good. And my retirement accounts have kind of shown that is using these different cycles to DCA into the market. So last thing I would say is Bob Loukas. He has a YouTube channel. He's really good about putting out just short videos. So his videos are not lengthy, but they're also like 20 minutes long. He does maybe 5 or 6 a year. So he's really good in that to oversaturate, you with content. He doesn't do it like every single day, which I appreciate. But I've been following Lucas since 2020, 2019. And he's been right the majority of the time. So him and Ben Cowan, which I'll talk about and probably in the next video when I talk about the risk metrics. But Bob Loukas is someone that I highly recommend. Anytime someone's like, I want to get into crypto, I send them the cycle trading video from Bob Loukas, which I'll attach to the bottom of this video. And then I always tell them to follow his Twitter X account and definitely his YouTube channel. So that's all I really have for today. I just want to do a simple introduction as far as what I'm doing as far as cycles, hence borrow by cycles. And what I mean by borrow is as we start looking at margin and I start looking at using more ammo as the stocks tend to drop or the S&P, what I'm going to do is use that to leverage more positions. And sometimes I'll catch it below if it's a left translated cycle. But if I see multiple left translated cycles together, I most likely will just kind of stay out of the market and use the risk metrics to kind of tell me when to buy, stocks and other ETFs. So thank you for watching. I hope this is a good first video. And I look forward to making a lot more down the road. And again, I just thought that since it's talking about cycles, I need to kind of talk about that within the first video.